Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
Welcome back to the High Rise, a laid-back, data-back conversation on all things cannabis, where we talk about U.S. MSOs, Canadian LPs, products, and market analysis through the lens of data. I am joined, as always, by Emily Paxia of Poseidon.
Hi, everyone. Welcome to the High Rise.
It is so great to be back in the office, actually, not on the road for once. How about yourself? Are you back in San Francisco?
Yes, if this podcast had more video followers, they would know I'm in the Poseidon office with our logo behind me. It looks like it's piercing my head, but I love the Poseidon logo. So yeah, we're here. We're in the office actually today. That some of the team is here. It's nice to be back together. I often find it's productive to be able to just shout over my shoulder at Morgan or Mike and hear a response instead of slacking or sending an email. So it's good to be back in here.
Yeah. Not to mention, having access to better microphones, sometimes better internet. Our internet at the office can get kind of squirrely, but just good to be here, not on the road for 1 week before we head out again for a couple weeks of travel. But I thought today we could start by talking about some U.S. MSO news and the big headline, and this is something that we've touched on before as far as what was coming, but it's actually official now, is that Trulieve completed their acquisition of Harvest. So that's finally officially done. I actually went to Harvest's website, their investor relations site, to look up some stuff, and I think a lot of stuff is now gone. They pulled it down because of the acquisition and a lot of content around that this has actually happened. So pretty exciting.
It's very exciting. I think it makes the biggest U.S. company, so it's pretty cool. And, I think it's neat, too, that it's a CEO that's a female, so it's nice to see it in the mix. And, it's interesting because for a long time, as Trulieve was looking at an expansion strategy, we had kind of been analyzing markets that would make sense where she could extrapolate learnings from their Florida market into other markets. And Arizona does have interesting parallels in terms of retirement populations, weather. So curious to see more about how this unrolls, but seems like a good move for her. I mean, it's, as we've talked about before, there's a lot here, so the execution risk is only higher when there's a lot to do, but I think she's trying to, dig in and get into the task at hand, so.
Yeah, so you're saying Arizona is the Florida of the West.
Yes, with less humidity, but nonetheless at times really, really, really hot.
Less alligators, more snakes.
Ugh.
Yeah. So no, you're absolutely right. It's really exciting to see, and I do believe they are the largest. In the announcement, they mentioned Q2 2021 combined revenue of $317 million, and I looked up what we talked about with Curaleaf, and their Q2 earnings were $312 million. So beat them by $5 million, which is a significant number, $5 million, but right there. So out of the gate now, the largest, and as part of this acquisition, they now have 149 dispensaries, and that's across 11 different states and what they call 3 strategic regional hubs, which I believe they outline as Arizona, Florida, and Pennsylvania, which kind of covers, pretty good geography there. Yeah.
When I hear Kim talking about that, I think that's the way that, some people are talking about putting a big tent pole in California for interstate commerce. I think that Kim's thinking about it as these regional hubs, which is an interesting strategy too. And this is what we talk about a lot too, is that the different MSOs are starting to really articulate their different strategies, and they're not all the same. So yeah, that's the approach she's taking here.
Yeah, and I know that Harvest had a pretty big footprint in Florida with some of their stores there, and obviously that's where Trulieve has been, primarily more or less, at. And so just kind of expanding into Arizona is pretty interesting, with this acquisition. And other markets, Harvest certainly has other markets as well, but they're headquartered in Arizona. And it's pretty timely because today at Headset, we launched our Arizona market measurement, as well as Maryland and Illinois. But I thought we could talk a little bit about Arizona and some of the stuff that I'm seeing in the numbers that I think are pretty interesting. And, we haven't spent a lot of time on this podcast talking about Arizona, but I think it's going to be more and more top of mind. I mean, it was top of mind for Harvest shareholders, but I think with Trulieve now there, people will be looking at it a lot more closely. So I want to start with September sales. So we're recording this October 7th. And so at Headset, we have full month September sales. And This is, pre-tax, post-discount dollar amount, but September came in under 180 million at 179 million in revenue, which is a pretty big market, for adult use right out of the gate. And adult use is new in Arizona. So Arizona's had a long-standing medical market, which kind of like the California medical market, had some kind of recreation component to it, I think. But, now 21 and over can go and purchase cannabis. And when we look at January sales for Arizona, it came in at $85 million. And so we're at like 100%, year over year, or basically since adult use sales started, not year over year quite yet, but, already over 100% growth. So once it flipped to adult use, it started growing pretty quickly. But one of the trends that we're seeing, in addition to like dollar amount is up, but basket size is down. And this is something I think we've talked about in medical markets. We usually see like the baskets, the transactions themselves are much bigger. People may be going less frequently, purchasing more, the price of products might be higher. All that kind of combines into just a higher average basket. And certainly that was the case for Arizona. But now from January to now, baskets are down about 25%. The basket size, I should be clear. But the number of baskets, the number of transactions has doubled. So you can see it's just offsetting some of that, lower basket amount. So, all in, it's a pretty good sized market for an adult use market, basically 9 months in, looking at these September numbers from adult use. So we don't really see this kind of build this quickly in other markets that we looked at. So what do you think about all of this so far?
I think it's a really exciting market, and I love when we see the kind of spreading out of consumerism across the number of baskets, not just the size of baskets. I'm willing to see basket sizes come down a little bit to then know that we're reaching a broader population, because to me, that's how we're going to see the continued growth in these markets. We've talked about, there was some of that in Illinois too, right? That we were seeing more spreading out in terms of the consumer base. And I think it's the ability to access these different form factors, which is really, really exciting for people. And I think it's attracting new people into the market, which is why I still think that, I'm glad we're moving into this omni-channel discussion around cannabis, because I think it's going to have an important and lasting, and this is how we transition into what will then be the next wave of cannabis consumerism. But I think that in the short term, the retail doors are very important windows into the world of cannabis for consumers who are just entering into this market, or people, who are re-entering into the world of cannabis because they had some kind of unfortunate experience with, something in college or something that wasn't as advertised and edible. So there's a lot better information out there, a lot more consumer-friendly product information and packaging. And so I think I'm excited by it. I'm excited to see Arizona, back in, was it 2016? Yeah, that the election where we got 8 of the 9 adult use states passed, and Arizona was the one that got stuck behind because of lobbying against it from a pharmaceutical company, actually. So I'm just happy for it that it's turned on, and really we're starting to see a great market there. Got to check out some stores when I was there, and they're good-looking stores. So I think the consumers are having a good experience, and I'm happy about it.
Yeah, no, it's certainly exciting, and some of those category trends are already starting to emerge. Like I noticed flower, as is often the case. I think flower is like 55% of the market in January. I think it's like 43% now. And a lot of that's getting taken over by vapor pen, and even pre-roll is kind of eating up some of that overall market share that had gone to flower. And that will continue to evolve, right, as more of these brands come in and the adult use market gets a little bit more mature. But one of the things I wanted to talk about too, just kind of context, right? So, I'm in Seattle. Washington State is one of the oldest adult use markets with Colorado. And I pulled some numbers just in Washington versus Arizona because we have similar populations. I think it's about 7 million across the board. I should probably double check that. But the populations are definitely in line. Yeah, about 7 million for Washington. And what is interesting, so, 7 million here, 7 million there. We're, in Washington, the market's been around for 5 years or longer, and you've got a new market in Arizona. So, how do they compete? Well, average monthly, kind of just eyeballing it, Arizona is about $180 million, and it's stabilizing right now. But, we see different kind of growth rates in different markets for different reasons. But let's say, 180 million, and say Washington did about 120 million. So already Arizona's outperforming Washington by $60 million in monthly revenue. So I went, are there, often it has a case of access. Like, are there just more stores in Arizona versus Washington? But that is not the case. It's the opposite. There's actually less stores in Arizona, 120 stores estimated versus about 280 stores in Washington. So there's less opportunity to purchase cannabis in Arizona, less places you can go. So where the revenue gains for Arizona are really coming from, average item price. So in Washington State, average item price, looking across all products, is about $15. And in Arizona, it's about $26. So, you're almost half the price in Washington than you are in Arizona. So there's some pricing power that Arizona has that is keeping those numbers up. And total baskets, so again, back to the kind of total transactions, Washington actually is outperforming Arizona. So 31.4 million versus 22.5 million, or about 40% more baskets in Washington. So there's a lot of transactions. It's just the transactions are almost half the price. So I think that's where that's where the difference is coming through, for better or for worse. And I thinking about this a little bit more, let's say Arizona and Washington have same population. The baskets are less in Arizona, the number of baskets, because of it's a new market, right? So maybe those new consumers haven't come in, and you can combine that with just not enough retail doors like for the population. So as those things start to get kind of more in line with kind of market dynamics, then I think you have an opportunity where if Arizona can have the same number of baskets as Washington, it's like a 40% gain. Then we could see a 40% gain on that September sales number of 180 million, which really, gets it to like a $250 million a month opportunity, which is like what we're talking about in New York, in a mature market, like a $3 billion, market in New York. So for all those reasons, it's pretty exciting and probably a really good, a good get for Trulieve.
I think so. There are some interesting dynamics in Washington State, too, that I think create pricing differences, such as the fact that cultivation is separated from the retail. There's a lot of different, and this is the important thing about understanding the nuances of these different states. But did you say 120 stores?
120 stores, Arizona.
That's some light coverage.
Right.
From a per capita standpoint. So, yeah, that market, I'm sure there's definite growth in this market as more people have access to doors. So yeah, that's a cool market. We've been excited about that one for a while. And it's so funny too, because it passed. And then I think it was you and I that were joking because all of a sudden the market opened.
Right.
And it wasn't like the other things where we were like, the hotly anticipated Illinois is opening. It was just like, oh, no, here we go. We're open. And all right, we're doing adult use in Arizona, which kind of feels right. It feels a little interesting that they did that, but I'm excited.
Yeah, me too. So we'll watch this, now that we're reporting on it, we can kind of keep tabs on it. But I do think it's a pretty exciting market if it can get to that kind of scale for the population. So we will see. But kind of moving on from Trulieve, other news this week, the parent company, a California single state operator or super state operator, acquired Coastal, or is working to acquire Coastal, maybe is a better way to put it, given some dynamics that are happening. So according to the release, Coastal is a retail dispensary license holder, operator with 6 retail locations, with 5 currently operating and 2 delivery depots, kind of spread, I think, primarily Southern California, with a couple spots in Northern California, in Stockton and Vallejo there. So 6 stores, 5 operating, and they're paying $16 million in cash and a contingent consideration of up to $40 million in equity, which is, if I don't know the contingencies around that, but let's say they meet some earnout or they hit the number. We're looking at $56 million for 6 stores, which is about $9 million per store. So, I know you're pretty close to this stuff, especially in the California market, Emily. Like, how does this line up with kind of what you've seen?
I think it's a little pricey for California. Realistically, what we're seeing here is about 1 to 1.5 times top line. If you're EBITDA positive, you're looking at roughly 5 times EBITDA, depending on the location. So in California, I would say that it's not just having 6 doors, it's where those doors are in the competition. So I'm in San Francisco. We have a ton of cannabis dispensaries in San Francisco. So each door, the value of it is not as strong as it once was. And so, but then if you look at some of these other markets, it's almost like limited license markets within a massive market. And as you had that awesome map where we were looking at the cannabis, legalized cannabis deserts that exist around these jurisdictions, and that creates even more value in those doors. And then you also have to just look at the population that surrounds the door, the location of the doors. And so, I mean, it's just my take that this is a bit of a markup, but it is a lot in stock. And we don't really know the details around that. Like, are there colors around the pricing? Right. I think parent company stock is down at least 60% from its de-SPACing date. So it's a tough currency for them to have to use. We talk about this a lot. The cost of capital in cannabis is very high because it's hard to get cash. But then right now these stocks are trading so low that it's also, you kind of loathe to use your stock when it's at these lower prices, because you could get so much further in February, you were getting a lot further with your stock. So it's a tricky situation. Immediately upon seeing that, it was like Monday morning, 2 pieces of news hit my feed. It was that the parent company had acquired Coastal, which I'd known about Coastal. I'm pretty familiar with a lot of the different chains of retailers in California. But then immediately saw the news that Adam Bierman and Modlin are suing them, and that they're contesting this transaction as a quote unquote fire sale. And there's a number of things. So it sounds like this will at least be delayed in terms of being able to actually, because there's the other thing that a lot of folks don't understand is that you get to the definitives and then you have to go through the transfer of the licenses, which in California, as you and I have discussed, we've gone through a number of challenges at the top up in Sacramento, and now we've got the DCC, which was the collapsing of several other bureaucratic organizations. So we're hoping it streamlines things. But I think that in the process of doing that, and also in the process of this cliff of all these licenses that had to get converted from temporary to or provisional to permanent, there's just a lot of paper to push through the halls of the DCC. So I'm not sure how much of a priority this is going to be while there's a pretty salacious lawsuit. I read some of the lawyers' commentary around it, and they were calling it kind of like a gunshot lawsuit, kind of like, we're not happy with how this is going, so we're going to sue. None of this seems that surprising. There is a history of drama around some of the folks involved in this, but, we'll see. I hope that we can see a productive end to it, because I just want California to get its feet underneath itself and turn into the market that we all know it deserves to be.
Yeah, no, all great points. And it does seem like the MedMen co-founders are often somehow embroiled in this type of drama. So hopefully it, clears up. One thing the parent company mentioned in this announcement that it does with this acquisition, and should it go through, is it expands their retail network to 11 operating stores and 6 delivery depots. I think prior to this, it's primarily Caliva. Yep. Is that accurate?
There's Caliva, Pantry, and then I'm trying to remember what the other ones were. But, the guys at Caliva are super smart, and they make a really great retail experience. And as you know, they're very data-driven, and I'm a big fan of Dennis over there. And
for sure.
Yeah, so I think, and Coastal stores are pretty cool looking. I have to dig in to see, I can't remember what the deal is with some of the markets of those doors, whether or not they are more limited jurisdictions, but it's been a busy week, so I didn't get to dig in on that. I couldn't remember what the deal was.
And I know that I think even prior to this with Caliva, or at least the parent company talks about their coverage in California with through delivery is a pretty sizable percentage of the state that they can reach, but that's delivery, not brick and mortar necessarily. And I don't know how far they're having their drivers go, but it sounded like they had good coverage there. But how you think is 11 stores? I mean, it sounds like a lot, but compare that to like MSOs and some of their footprints, and like Trulieve in Florida, right, is a good example of like a lot of stores in one market. Who has the largest count? Do you have like any sense of like who has more
in California? Yeah,
like a chain of.
Glass House does have, but open and operating?
Mm-hmm. Open and operating, right. Yeah, that's right. Glass House was doing a deal.
They did Element 7 or whatever. Mm-hmm. Yeah, there's open and operating, not that many. Mm-hmm. But, I think again, I'm always saying this word, but there's a ton of nuance to it, because my whole thing is like, I don't I don't want 11 doors. I want like 5 doors that are doing north of 10 million in revenue and are EBITDA positive, I mean, and not competing and not going to be competed down. So, I'm looking at that because the effort to go and acquire and go through these processes, we have, I don't want to give away too much on detail, but we have a lower limit in terms of revenue in a door that it's just not worth it. And so if we were looking at a collection of stores, we would probably say it's not worth it. And it really does. It's that annoying thing like location. It really matters with retail, especially now.
Yeah, that's a great point. Like the unit count can be such a vanity metric, right? You can have 20 stores, but if they're out in the middle of nowhere, not doing any volume, doesn't really count versus a low number that end up doing a lot of volume. So yeah, for sure, it is nuanced.
Yeah. Well, and in these more competitive and established markets, it becomes even. You have to be even choosier, in the other markets, as we've talked about, selling ice in the desert. It's a different situation for the time being. But here, and unfortunately, I was just talking with an operator out here about this morning. We are competing against not just a big illicit market, but a sophisticated illicit market with, frankly, great cannabis. I mean, you don't know what's in it because it's illicit.
Not tested,
it's
right.
not tested, but chances are it's probably pretty good. Unless it was grown by the cartels using chemicals, but you never know.
Right. So when I was thinking about this price per store that they're paying and kind of market rates, it made me think about these limited license, these selling ice in the desert locations. And Pennsylvania, I think earlier this year, there were some headlines, I think in May, where like the average dispensary license sale was going for somewhere between $20 million and $35 million for each storefront. So it just shows like, I think the different dynamic, California has a limited number of licenses, but it's not the same kind of limited license like we see in a market like that. So it is pretty interesting, the difference there.
Mm-hmm. It couldn't be more different.
Yeah. Well, we'll see how this pans out. But moving on from the U.S., let's touch on Canada briefly. So kind of in earnings season, and just today, I think it was, I saw a interesting thing on Twitter from Tilray's, Q1 2022. So their fiscal year here. Their CEO mentioned, what did he say? Erwin Simon said, quote, "There are a lot of little LPs out there today that are ankle biters, that are just selling products on price," which I think is, we should pick this apart a little bit.
You think?
But the term ankle biter is like, I kind of laughed when I read it because it's such a funny term, like little ankle biters. But to call your competition, your network of peers, ankle biters is quite the insult, I guess. And then they also mentioned, that they're just selling products, solely on price. Like price is how they're doing it. I don't know. I mean, it's kind of a blanket statement. Kind of seems a little unfair to the rest of the operators there. Do you think anybody's going to bite at that? What do you think?
Anyone's going to bite his ankles?
Bite at the ankles?
I hope so. No, I mean, I feel like it's a ridiculous comment. I think if he was very confident in his business, he wouldn't be speaking in these types of terms around small business. And you can see the stark contrast yet again when you hear like Ben Kovler talking about it, when you hear Jason Wild, any of these operators, they not only are they not threatened by small business, they're trying to help to facilitate regulations around having small business. And I think it's because most of us who are here are actually interested in building an industry. We're not in this like boom bust cycle that we see in other markets where we're interested in seeing a lasting industry. And the fact is that lasting industries are built with a number of different levels of business, and you have small business and you have big business, and that's what makes the world go round. And so I think that speaking about business in this kind of a derogatory term and kind of a dismissive term is just, it's a sign of weakness in one's own reflection on their business. And I just don't think it's it's not a building comment. It's a fear-driven comment. So
yeah, and if they're selling products just on price and he's calling them out, I mean, it must be doing some damage to their business, right? If he's acknowledging that. And if there are products that are sold on price, shouldn't they fill that gap if they're, a large company, the largest LP? I feel like they should be able to, at scale, go and tackle that segment of the market if they're so concerned about it. So, I get, like what we're talking about with Arizona, like you want to hold pricing at a certain level, but there's, we see it all the time. There's brands that introduce, premium grade products all the way down to value priced products, and like find a way to do that without, impacting, your overall brand in general.
Yeah.
And, not worry about the ankle biters out there enough to call them out in such a poor taste there.
Yeah, I mean, and by the way, maybe the ankle biters have a better sense of the market. If your market wants lower priced but decent quality cannabis, grow it more efficiently and grow better cannabis. Like, end of discussion. People will pay more for better cannabis. We see it here in California. Give me a more competitive market than California. People can literally go to an illicit market dealer and get amazing cannabis here, and they still do choose to purchase in the legal framework and pay up because of our taxes. And you can find sun-grown biodynamic cannabis for like, I don't know, $15 an eighth or something in a bag, and it's like in a store. I mean, there are ways to do this. It's actually not rocket science. I think it's just an overcomplicated business model. It's I always say that we had product market fit with cannabis, but somehow I think some of these businesses have managed to break that.
Yeah, interesting. And you're right about the California market. I was just recently looking at a couple brands in California that actually command a pretty high premium on their eighth pricing, surprisingly. And then there's, on the other side, there's a lot of brands that sell eighths at a much lower price that do really well. So there's room on both sides. I don't think it has to be one or the other, where you have to be, only premium, not worried about price, or you have to be only solely worried about price and not worried about like premium quality. Yeah. And a company the scale of Tilray should have the facility to service the whole thing. But this kind of comment makes it sound like they can't, and they're just aiming for one area and are worried about these little guys, which they shouldn't be. Just kind of makes them look a little weaker than I think they should. Yeah. It's like, you're never supposed to say like negative things about your competition, because it just reflects on you, I think is the kind of common refrain around that. So interesting to see, but I kind of laugh at the ankle biters. It's a funny term. Little ankle biters.
I like the ankle biters.
Yeah, I don't know if I've ever used it. It just sounds like something from 50 years ago was like a common thing, but I just don't hear many people talk about ankle biters. Mm-mm. But speaking of Irwin Simon, he also made headlines about his compensation. So this year he pulled down so far $13.2 million US, or 16.7 million Canadian in 2021, according to their regulatory filings. So he's pretty well paid, and you and I were discussing kind of compensation just across the industry, and it does seem like Canada's a little out of balance with where they're at with the companies and kind of the revenue profiles to what we see in the US, to the compensation for US leaders. And it to me, it's just like another one of those upside down world things that we're in, where US companies are listed in Canada and Canadian companies are listed in the US, and Canadian companies are, underperforming in many ways, and U.S. companies are outperforming. Yet you see kind of compensation patterns like this. So, is this just like just something that they can do? Do you think it'll ever balance out where we'll see something more equal across the borders?
I think the shareholders should start stepping up about that. I don't know. I mean, no, I don't. I think that the U.S. operators actually that we saw in that MJ article with their compensation listed, because it's public, right? Because of the fact that they're public companies and it's listed on the upper level management teams. In a public company, you have on the board compensation committees, and the whole goal of the compensation committee is to make sure that you attract and retain talent, and that there's alignment in the compensation packages such that you're growing and improving the business to benefit the shareholders. To me, cashing out people who have not been hitting their quarters is a misalignment for shareholders. Every dollar in this industry should be going back into building, not being taken off the table, and especially after such a short term. So I just think this is a misalignment with investors, and I won't ever feel differently.
Yeah. And it's not like this is a new story.
No.
For sure, this has come up many times. I think it's just top of mind. Some articles were written because of the filings that came out. So Yeah, I guess if it's been going on for a while, I don't see any change happening, but just something to call out, I suppose.
Yeah. No, it's important because I think that, again, like coming back to, as people tune into the industry and think about, what the future looks like, these are the kinds of things that I think we'll look back on and say, wasn't that crazy?
Totally. No, that'll be a large book when it's written. Just call it "Wasn't That Crazy?" The Story of Cannabis.
I had another title which was "Tales from the K-Hole," but that's a different book.
That's good. That's good.
Yeah.
Well, I think that'll about wrap it up for us today. As
we have exciting news for next week.
Yeah. So next week, yeah. So I think we talked about it on the last podcast, but for those that might not have heard it, Emily and I are going to both be traveling in Ojai for the Trailblazers event, where a lot of great people will also be in attendance. So we plan on recording some podcasts with some really great people. We're still getting kind of the lineup organized, but I'm pretty excited about it. It's always really nice to get those kind of personal opinions and views from people that are so close to all these companies that we're always talking about week over week. So really looking forward to that. And at the same time, I'll be doing a panel on data that also has some people from Springbig and Trees that will be there. Or sorry, not Trees, LeafLink. And Emily will be doing an MSO panel with Air, Pharmacan, and Verano. Does that sound right?
Yeah, I'm excited. I haven't met George from Verano, so it'll be a new person in my world. So that'll be cool.
Yeah. And I know Jamie Mendola will be representing Air, and we've had him on the podcast, so it'll be really cool to kind of see a panel and what's new there. I think we were talking a lot about the beverage play that they were making at the time. They did touch on that when I was at the Business of Cannabis in New York too.
Oh, cool.
Their COO was presenting and talked a lot about the beverage stuff. So maybe we'll get more information at Trailblazers. So look forward to that, everyone. In the meantime, don't forget to rate and review us on your favorite podcasting app, and we'll see you next week.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.